Okay, I know guys that you have seen a lots of video about the identifying the liquidity using SMC concept and ICT concept, but trust me, this video will going to change your view by looking into the market. Right now you are watching the Euro USD 5-minute chart. So this is somewhat the normal candlestick pattern which look like, and this is what we have a footprint chart and cluster chart, whatever you want to call it. You call it. I right now using the Ninja Trader platform, and this is the Euro USD on the 5-minute volumetric bar. So, so there are some concept of when it comes to the identifying the liquidity, we have so many ways of identifying the liquidity. So previously, I know in a SMC concept there are some way of explaining, yeah, identify the liquidity are kind of an whenever the market swings and swing high, swing lows, those are the levels. Those people are calling the liquidity. But in terms of my views, I don't identify them as a liquidity. Swing highs and swing lows cannot be a liquidity level. There could be the some reason like some aggressive traders has participated and they literally push the market downside. But before that, the understanding about how to find the proper liquidity, you just need to know that what is the liquidity. So for that, I just need to explain in this slide. So right now, this is one chart of some particular segment, but I just need to show you that this is a complete liquidity heat map of that particular chart. So you can see the highest number of passive traders are available at this two level. So what is the main difference that you are seeing here? Somewhat we have a volume here also and here also, but when it compared to the liquidity, I call this is the liquidity, the stacking of the volume is not present at the single price, the volume is stacking here. So this is called the liquidity. So just imagine these are the level 3 data, and you guys are identifying the liquidity just based on the candle swing or candle slow. No, when you have already such an advanced tool which is already available in the market, so when you are investing your hard earned money to take a trade, then I don't recommend you to simply close your eyes and this is where the place, and this is where you need to identify you have found the liquidity and this is where you need to take the trade. No. So right now your competitor is not against your human, but most of the places these liquidity are created by the algorithms, because the most of the volumes are, this is how the level 3 data, when you got the access to the level 3 data, see how exactly the volumes are filling here, how the stacking is happening here, how the pulling is happening here. So when you see these things, right, that time your eyes will open that really till today we might thought that the FIs, DIs and financial institutions are really controlling the market, but even those people are completely shifting their orders into the algorithms. Right now the completely orders were controlled by the algorithms. So by just looking into the candle things, that doesn't mean that you are making the correct decision. So when you have access to the level 3 data and level of data that is giving the information about this is the place where the highest number of activity has been done, so just why you are spending your valuable money just by looking into the candles, and why you are not spending those money on these valuable information. I know there are some people, they those people might be feel that these are the not a useful data. Obviously if you don't know how to use this data, then obviously you will feel ending with by saying that this is the not for useful data. But trust me, these are data are directly coming from the broker, and these datas are literally which order has already filled at this particular level. So these are the places where those you can easily identify where exactly the highest number of volume has been traded and how it is responding to those levels, yeah, candle closings, right? So right now if you see, there is an order block right now at this level. So if you found, so this is what the order block, and when you respect, when you say that some more the price will going to test this order block, and if you see the rejection, then we can take the entry and this concept. But when you seriously look into this order block at the footprint level, so now do you identify where exactly the highest number of the volume traded at this particular red candle bottom, right? Not at this level. So somewhat if we found some good volume at this level, then we could have considered that in the upcoming days this volume might have tested, and if it is trying to reject, then we can make some good entries. But just by looking into these concept, yeah, these price action, we don't take we don't have that much of sufficient data to take a proper analysis that where exactly the liquidity is on the chart. So obviously to identify those concepts you seriously need to have uh, learning about this concept, like how you can identify these footprint value where exactly the liquidity is there, where exactly the volume is there. As what I told you, what is the meaning of the liquidity? The liquidity is the stacking of the volume, that you can define that where is the highest number of the volume has formed on the candle, you can consider there is the place you have the liquidity levels. So this is how you need to identify the liquidity levels in the any market you choose. You will get the data from this. You can trade on the your normal market. You can trade on the forex. You can trade on the cryptocurrencies. Everywhere these footprint data is available. You can fetch this information. You can identify this information, and this is the proper way to identify the liquidity, right? So somewhat if I show you some of the other example, like here I have drawn some higher time frame liquidity box, and this is how when it is trying to test those levels, and this is how it is rejecting. So somewhat this is the first time it has tested, then obviously I never recommend anyone to initiate a trade whenever the market is testing the first time. Then always, most of the time, I do recommend that testing of those levels are very important when it is testing the second level, right? So there are some of the other confirmation which are coming bottom of this trend, which is suggesting that now it's a time to trail your stop loss. So somewhat you have took entry over here by considering this is somewhat the market has tested this zone and was trying to fall from here. So if you have initiated some of the trades on this candle, so there are some information which are available here that those information are suggesting that so this is the time you should trail your stop loss. So if you don't know how to read this information, then you can refer our previous videos and you will get some ideas. And yeah, this is the way of properly drawing the liquidity on the chart. Just simply don't use the price action to draw the liquidity. That is not that much of useful. So if you need a proper way to identify the liquidity, then use this footprint and these volume profiles. These information will give you the proper way of liquidity, right? So this is all about the today's video. I hope you got the way that where we found the liquidity on the chart using the order flow या cluster chart on any market, and this is the how we use it. That's it. So see you in the next video with a new topic. तब तक के लिए have a happy trading.